Thank you for joining us at XM.com for this Forex Preview. We'll be having a look at New Zealand's GDP numbers for Q3 out on Wednesday. I'm Cristina Marujas. Joining me today is investment analyst Cristina Barthenido. So, Cristina, the New Zealand economy had its slowest annual expansion in 3 years in the second quarter. However, the Reserve Bank of New Zealand said that there is no need of a rate cut back in November. Do you think that this week's GDP numbers could enforce additional monetary easing in February?
Well, we shouldn't forget that the third quarter was quite challenging for global markets and also for the export-dependent New Zealand economy because of the additional U.S. tariffs set to China during that period. However, New Zealand, we had lower interest rates, retail sales also strongly rebounded during the third quarter, and house prices were also on the rise, and all that might have somewhat balanced the weakness in the business sector and also the growth slowdown in the third quarter. So next week's data may not urge any rate cut at the February's policy meeting, especially if the data come stronger as markets expect. Besides that, the phase one trade deal between the US and China will definitely further discourage any monetary easing in the near term. Of course, the phase one trade deal is just part of the trade war that will be fully resolved if the sides manage to find a compromise at the phase two trade talks, which are expected to be more complicated. But since the structure of the phase two talks haven't been determined yet, and the announcement of a larger infrastructure spending by New Zealand last week may take some time to materialize, the central bank will likely rely on data to judge whether there is a need for monetary easing in the near term.
I see. And turning now to the kiwi, it had a remarkable rally this month. Do you think that this week's GDP growth readings could push it even higher?
Well, since global risks such as the trade war and Brexit have taken a backseat and the focus shifts back to data releases, I think the kiwi could find some room for improvement before turning neutral, especially if GDP growth data this week showed that the slowdown in New Zealand, the economic slowdown in New Zealand is bottoming out before the end of the year, signaling at the same time that there is no need for a rate cut at the first quarter of 2020. On the other hand, if the data come in disappointing, the missing forecast should be significant to raise the minimal odds for a rate cut at the February's policy meeting.
Cristina, thank you for joining me today, and thank you for watching this Forex Preview video here at XM.com.